Trading style breakdown. In this video, we are going to go over different trading styles, and we are going to go over trading styles that may be a good fit for you. So let's get started. Now, these are the 4 trading styles that we're going to cover. We have scalp trading, we have day trading, we have swing trading, and we have position trading. So what I want you guys to understand is I want you to understand each one of these trading styles, and then I want to show you the ups and downs of these trading styles so you can kind of have an idea of what type of trading style you want to implement into your trading. So if you guys can take a look here, we have 2 charts. So we have day traders and we have swing traders. Now in day traders, there's 2 categories. There's day trading and then there's something called scalping, which I'll break down. Now the whole idea of day trading is you are in and out of a position the same day. The whole idea of a swing trading approach, or you being a swing trader, is you're in and out in a matter of a few days to maybe a few weeks. Now what I want you to understand is I want you to understand what type of trader do you want to be. Do you want to be a day trader? Do you want to be a swing trader? Now at the same time, you kind of don't have to fully be one type of trader, but when you take on a new trade, you have to have a mindset that, okay, am I going to day trade this stock? Am I going to swing trade this stock? That mindset has to be established before you take on a trade. Why? Because what a lot of people do wrong is they might enter a day trade, right? And they might say, okay, I'm going to get in, I'm going to get out after an hour, after 2 hours, or after it hits my price target or my stop loss. And when the stock goes to their stop loss, they don't exit and they say, you know what? I'm now just going to become a swing trader. I'm going to swing this position. And that's a terrible approach. So before you guys take on any trade, you have to have that mindset established. Am I going to swing this trade? Am I going to day trade it? Am I going to scalp it? What am I going to do before I execute this trade? So now let's go on to our first trading style, which is called scalp trading. In other terms, scalping. So what is scalping, or what is scalp trading? Scalping is ultra short-term day trading. You're basically looking to quickly make a few cents in a matter of seconds to minutes. So what you do is you enter a trade, and then you basically exit in a few seconds or even a few minutes. So it kind of looks something like this. So if you guys take a look here, in this situation, this is a 1-minute chart, meaning each candle here represents 1 minute. That's your entry, that's your exit. That's your first scalp. You can see it's a super small move, but that's the first scalp that's being taken. Then, as someone that's scalp trading, you enter again, and you can exit again. And you can see this is happening in a matter of 3 minutes. This is happening in a matter of 2 minutes. So it's when you're scalping, you're getting in and out of a trade matter of few seconds to minutes. There's times I have scalped where I'm in a position and I'm out in 30 seconds. I'm in a position, I'm out in 10 seconds. I'm in a position, I'm out in 2 minutes, 3 minutes. That's the whole idea of scalp trading. Now you can see the same person trading the stock got in, got out, got in, got out, got in, got out, right? That's scalp trading. Now, you have to identify, are you going to be a scalper? Now, one thing that I want you guys to understand is I don't want you to enter a position, say I'm going to swing trade or I'm going to day trade it, hold for a longer period of time, and you panic. You enter, you panic. You enter, you panic. Now, when you look at the chart, you might say, wow, I did a good job, but your approach was bad because you kept panicking and maybe you got lucky this one time. Right? But if you approach this saying, okay, I want to enter at this point, I'm going to get out after a 20-cent move, a 30-cent move, a 10-cent move, a 50-cent move. As soon as that move happens, you're out. If it goes against you, which it will at times, you also have to learn how to exit as someone that is scalping. Once again, as scalpers, our job is to capitalize on very short price movements in a very short period of time. And you can see, same person that was trading this, that scalped it, entered once, twice, and 3 times within the same day, and this was probably all under 30 minutes. Now, some key notes or key things to keep in mind for scalping. First and foremost, when you're scalping, you need to master the art of order execution. You have to be able to execute orders at a flawless level because you're fighting for pennies, right? So let's say you buy a stock at $105.20, right? If you're scalping, you're looking to maybe exit at 105.8, right? Or maybe you're buying a stock at 7.2 and you're looking to exit at 7.5, right? So you have to make sure you're getting a great price. You're really fighting with the bidders, the ask. You're looking at the level 2. You're looking at the bid, the ask. You're fighting the buyers and the sellers. You're really trying to get a very great execution price. You're really not using market orders. You're using limit orders. You're really getting a phenomenal point. So you have to be good at order execution. You have to be super fast, super quick to be able to hit the ask, hit the bid, get in, get out. So this is one thing that takes a lot of time to master. So a lot of people that get started, they're like, oh, I want to scalp. Cool. How quick are you to execute trades? Right now, executing trades, it's very easy where you just hit buy and sell, but you have to understand the hard part is the thought process that goes behind the buy and sell and how quickly and effectively you can actually make those choices. Next, you need extreme discipline to be able to enter and exit trades quickly and effectively. Remember, on short-term time periods, stocks are moving up and down very quickly. So you as someone that's scalping, you have to have extreme discipline where you can execute the trade, get in, get out, know where your stop loss is, know where you're going to exit on a mental level, get in, get out, get in, get out. And it has to be done at a very fast and effective pace. Next, focus is on small time frames such as 1 minute chart and 5 minute chart. So if you're someone looking to scalp, you're looking at very small time frames, 1 minute, 5 minute, maybe 15 minute, but your focus is trading off the 1 and 5 primarily. Those are two time frames you're really looking into to actually enter and exit plays. Next, make sure there is liquidity in the security you're trading. Now remember, if you're scalping and you're looking to make 10 cents on a stock that's at $100, for you to really make money here, you have to have a lot of size, right? So if you buy a $100 stock, for you to make money here, you really have to invest a lot of money and you have to capitalize on these 10-cent moves. Now, if that's the situation, you want to make sure there's liquidity present in the stock. You want to make sure that if you enter, you can quickly exit. You want to make sure that that's available, that there is size available, there's volume available in that stock or in that option, whatever you may be trading. Just make sure that there is liquidity, because if liquidity is not present, you will have an extremely hard time entering and exiting positions, especially when you are trying to scalp, get in and out at a short time period. Next, to scalp, right, you have to kind of have $25,000 or more of a trading balance in your account so you can be over the PDT rule. Now, that doesn't mean you can't scalp if you have less than 25,000, but if you guys remember, there's something called a PDT rule where if you have less than $25,000 in your trading account, you can only make 3 day trades in a matter of 5 business days. So with that being said, if you scalp 3 times in the same day, your positions will kind of end out and you won't be able to trade anymore. So it's very important to understand that concept. So if you're someone that's looking to start trading tomorrow and you're like, I want to scalp, and you only have $2,000, I'm sorry, it's just not realistic for you to scalp for $2,000, $3,000, $4,000. You're gonna need a larger account size, which is why I want you to understand the different approaches to trading, so you can pick one that best fits your criteria for the current moment. Now next, we have day trading. So what is day trading? So day trading is executing trades that last less than 1 day. Basically, all your positions are closed out by end of the trading day. So day trading, in some sense, is kind of similar to scalping, because when you scalp, you're entering and exiting the position within the same day. But the difference that exists in day trading and scalping is, in scalping, you're in and out after a small move. You're in and out after a few minutes, maybe a few seconds. Day trading, you're in and out maybe after 2 hours, maybe after 3 hours, maybe after an hour and a half, right? So a day trade would look something like this. Let's say this is a 1 or a 5 minute chart. Someone enters here, they exit, they're done. Now a scalper would enter here, exit, enter here, exit, enter here, exit, enter here, exit. maybe enter here, exit. That's what someone scalping would do. Day trading, or someone that's day trading, would try to capture somewhat of a bigger move, probably trade a little bit less, and take the trade from there. So the whole idea is to understand what your trading approach is and kind of take it from there. Now, scalping and day trading, once again, very, very similar things. Same thing with day trading. You need to master the art of order execution. You need extreme discipline to be able to enter and exit trades quickly and effectively. Your focus is on smaller time frames such as the 1 minute chart, 5 minute chart. When you day trade, you can kind of go to 15, 30 minute and a little bit larger time frame than just the 1 and 5. Day trading, same concept. You need to make sure there's liquidity in the stock that you're trading. And also you need to have over $25,000 so you can be over the PDT rule. So once again, day trading and scalping, very, very similar idea. It's just scalping is very more fast paced. So if you're someone that's scalping, just kind of be careful. Don't start out trying to scalp. It's just for most people that I've seen that start scalping initially, start burning their account and start, destroying it day by day. So it's kind of good to avoid scalping. Day trading, cool, hold positions for a little bit longer, but trying to scalp when you guys start out is not a good idea. As you guys progress, yes, add scalping, learn how to scalp, get better at it, but starting out, avoid scalping. Day trading is pretty fine. Next, swing trading. So swing trading is a style of trading that attempts to profit from market movements that last from 1 day to as long as a couple of weeks. So the whole idea of swing trading is something like this. Let's say this is a daily chart. Each candle represents 1 day. Your entry would be, let's say, July 10th. And as the stock is progressing, your exit is, let's say, August 2nd. So you're holding for about 3 weeks, sometimes 2 months, sometimes 2 weeks, sometimes a week. That's swing trading. Now, swing trading is a little bit different than day trading. As you guys can see, the holding period is different. The stocks you may be trading when you're swing trading, day trading, and scalping may also be a little bit different, right? So what do I mean by that? Now, a few things to keep in mind for swing trading, which kind of breaks down what I meant by that, is you need to look for high quality stocks, avoid cheap penny stocks that are strong companies. So once again, you need to look for high quality stocks that are strong companies. Avoid cheap penny stocks. Avoid any company that's where you see a stock chart where the stock was at $57 2 years ago, and now that stock is at 32 cents, right? Because most likely this company is going to keep going down. What a lot of people do in this situation is they go, okay, the stock was at 57 2 years ago. It's now at 32 cents. It's only got to go up from here. Guys, it doesn't only have to go up from here. Do not get messed up with that. Do not get confused by that. A lot of these companies can go lower and lower and lower. So don't get caught up in trading one of these very cheap penny stocks or very shitty companies, right? If you're swing trading, focus on strong companies. Focus on high quality companies, high quality stocks that you'd be comfortable holding overnight, right? So for example, let's say we look at a stock that's been up 400% in 2 days, right? If a stock's up 400% in 2 days, am I going to be comfortable in buying this and holding it overnight? Absolutely not. Because the next day it can gap down and go down 50%, 60%. Can it keep going up? Yes, there's a possibility. But seeing something that moved up 400%, 500%, and holding it overnight is not a good idea, especially for swing trading. Now, if something is up 400%, I might day trade it, I might scalp it, but am I going to hold that stock overnight? Absolutely not, because that stock right off the bat is not a good trade to hold overnight. It's already up 400%. It might fall the next day. And a lot of companies like that, especially stocks that get FD approvals, or especially stocks that can go 400% in a day, tend to fall just as hard. Now, your focus is on larger time frames, such as weekly, daily, intraday, such as the 1 hour, maybe the 30-minute. You can go to those time frames. Right, so your focus on time frames kind of is a little bit different as well. And then finally, you don't need to have a minimum of $25,000 for this. Why? Because when you're swing trading, you're buying a stock maybe Monday, you may be selling Tuesday, Wednesday, Thursday, or next Monday, or the Monday after, or the Monday after that, right? So that's not counting as a day trade, so you can kind of take those trades as many times as you want. So you don't need to have a minimum of $25,000 for this. Next, we have something called position trading. So position trading is a style of trading where a trader holds a position for a very long time, such as several weeks to months. Now, me personally, I don't like to call this trading. This is more so on the investing side. Not a lot of people that are known as traders do this. This once again is more so, I put it more so on the investing side, but I just wanted to cover it so people kind of have an idea of what it is. I don't want anyone walking away from this video or this topic or this course and hear about the term position trading and say, oh, well, I didn't learn about that. Well, position trading is something where you hold a stock or hold a position for a few weeks to maybe a few months. I kind of combine it with the idea of investing, right? So now investing comes into something where you're buying a stock or you're buying a position and holding it for a very, very long time, like multiple years. Position trading kind of comes a little bit below that, right, in the time frame aspect, but it's very close to the idea of investing. Right now, people that are looking to trade don't really classify them and say, oh, hey, I'm a position trader. 90% of people, 80% of people that are starting in trading are probably day trading, scalping, swing trading. Not a lot of people are position trading, but I want you to understand the concept of it. So when it does present itself, you kind of have an idea on what position trading means. Now, position trading, just to go on this chart, kind of means something like this. So let's say this is a daily chart. Each candle represents one day. Your entry is March 1st, 2018, at let's say $24. And about a year and a half later, stock goes to, let's say, $44. You bought here, you sold there. As a swing trader, you maybe bought here, sold there. As a day trader, you bought and sold the same day. As someone that's scalping, you bought and sold the same day too, but your entry and exit is probably a few seconds to a few minutes. That's the difference between all four of these trading styles. Right now, key things to keep in mind for position trading, very similar to swing trading. You need to look for high quality stocks, once again, that are strong companies. Avoid cheap penny stocks if you are someone that wants to position trade. Focus is on larger time frames such as weekly and daily time frames. You don't need to have a minimum of $25,000 for this once again. Down here, obviously price action is key, but seeing stocks that you're looking to position trade or seeing stocks that you're looking to swing trade, you don't just focus on price action. You need to have news, market events, economic events, what's going on with the world. All these things play a role. For example, let's say I want to position trade Apple. I want to buy Apple right now. Apple is trading at $220 right now. If I buy Apple right now, right, and I want to hold it for a year, maybe a few months, I want to make sure that price action is obviously good. Besides price action, I want to make sure the news of the company is good. The economic stance of our marketplace is good. Everything looks good. All the financials line up. Now, if Apple is trading at $220, and let's say we're going to war, right? We're kind of facing a recession. Let's just say these are things that are maybe happening, right? I wouldn't look to be a buyer in Apple because I know these factors are going to affect Apple's stock price, and that's going to most likely cause their stock price to go down. So these are things you as a trader need to really, really look at and fully understand. And when you understand this, it goes down to you knowing what type of trader you are, what type of trading approach you are taking on the particular stock as well. Now, the same question that everyone has, once again, which trading style do I pick? I see the 4 trading styles, which one do I pick? Now, that depends on a few criteria, such as what is your trading personality, what's your account size, your risk tolerance, your availability, your preference. So for example, if you're someone that can't be in front of the computer when the market is open, you can't day trade, you can't scalp. It's just not possible because you need to be in front of a computer. So if you're like, hey, I have work, I have school, I have some other priorities at this moment, I can't be in front of a computer when the market is open, cool, fine. You can't day trade, you can't scalp now. But now you may be able to swing trade, you may be able to position trade, right? Now, what if your account size is $2,000? Can you really scalp? No, you won't be able to scalp. You can maybe day trade. right? You want to have the highest efficiency of day trading, but scalping is completely out of the equation, right? Next, your trading personality, right? Questions such as how quick are you on execution? How do you handle risk? Now, someone that gets into a trade and gets nervous right away and starts getting scared and starts making bad trades, they won't be able to scalp or day trade because they get too nervous, they get too scared. Now, someone that is getting scared and nervous would have to maybe swing trade. Maybe say, you know what, I found a great trade. I'm going to buy the stock, place my stop, set up my trade, and leave it from there, right? Same thing with risk tolerance. This kind of comes into your trading plan, which I kind of broke down on how we're going to move forward with it in a different part. But your risk tolerance plays a role where you have to understand how much are you risking per trade, how much are you risking per your account size. All these things play a huge role. And obviously, preference. Everyone has a different preference. Sometimes what your preference may be might not be the best route to take. For example, my preference may be, hey, I want to day trade or I want to scalp. Cool. My preference is to scalp, right? Or my preference is to day trade. Cool, that's what I want. But can I do that? No, I can't scalp. Okay, do I have the availability? No, I can't. What's my trading personality? And this is something you guys are going to learn about yourself as you progress with real money, right? And once you learn this about yourself, you're going to see like, wow, I actually cannot day trade. I want to day trade, but I can't. I need to improve these different aspects because if I don't improve them, I'm actually just going to be stuck. So these are the 4 trading styles that I want you guys to understand. Picking which one, once again, is something that takes time. It takes practice because you kind of have to dabble into it. So if you are someone that hasn't dabbled into any of these trading styles or haven't traded before, dabbling into it, figuring it out, picking your trading style, picking your trading strategy, and taking it from there is a huge stepping stone for you to get closer to becoming a consistently profitable trader. And that's what we're trying to get to. So I want you to understand all of these trading styles. So once you do see them, you know how to approach it. Just one last thing before we end it. Guys, whenever you take any trade, like let's say if I take on a trade tomorrow, you need to know before you take the trade, and I'm bringing this up again because I want to cement this into your heads. Now, before you take on any trade, let's say you take on a trade tomorrow, you need to know, am I day trading this? Am I swing trading this? Please do not enter a trade. Please do not enter a trade. Once again, do not enter a trade as a day trade and then say, you know what? I'm down. I was only supposed to lose 200. I'm down 500. Whatever. I'll just hold it overnight. That is not a good approach. If you want to day trade it, you have your levels set up, cool, day trade it. If you want to scalp it, cool, scalp it. But do not switch your trading style or the way you're approaching the stock in between the trade unless you have a good reasoning and you're up on the trade. If you're not up on the trade, exit, cut it off. Like, keep that in mind. That's very, very important.